Welcome to this podcast on business skills for private practitioners. My name is Banham, and I'm the co-founder and managing director of Psychology and Psychiatry Direct. And I'm going to spend the next few minutes just trying to give you the benefit of my experience in working in the commercial world for 30 plus years. And hopefully you'll find some of this just gives you a few pointers, either how to optimize your business if you're already working in private practice, or if you're considering starting in private practice, some of the things you need to be aware of that may well help you do that. It's really important to stress that all of this is purely based on my own experience. I'm not a financial advisor. I'm not registered to give you formal advice. So I would always advise anybody either working through private practice or thinking about it to get proper professional advice, either from an accountant or a solicitor, depending on which is most appropriate for your circumstances. But I hope you find this helpful nonetheless. So first of all, thinking about the legal structure of your company or your trading entity, there are a number of different possibilities. I'm going to focus on three that I think are most relevant to setting up in private practice on a small and medium scale. The first being a sole trader or partnership setup. Many people will use this already. It's a very simple structure, low cost, and easy to set up. There are a few pros and cons that it's probably worth being aware of. So it's basically like being self-employed. Many people who've done private practice in the past will have done it in this capacity. And like I said, it's a very simple structure to set up and administer. Very low cost. There's not huge reporting elements. Obviously, you have to comply with the tax legislation, which I'll cover to some extent as we go through. The downside is that you have a high degree of personal liability. So if you have suppliers or obligations, contracts, that kind of thing, then the company essentially, or the entity, is you, rather than one of the other options, which is a limited company, which stands alone as a separate legal entity. I'll come to that in a second. One major distinction between a sole trader or partnership and a limited company is that whatever income or profits the entity generates are considered yours personally. So you will have to declare those and pay the tax on those whenever you do your tax return, which we would have to do if you operated in this way. You'd have to do a self-assessment tax return. So whatever income you generate as part of that will be considered your money, and you would have to pay tax in the normal way. You cannot delay taking that money from the entity. It's considered yours the minute that income is generated. I'll explain why that's important when I come to the limited company element, because there's a mechanism there where you can essentially delay taking that income personally if you don't wish to do so at the point where it's earned. So like I said, it's a very simple structure and one which many will be familiar with, and many clinicians with whom we work are already working in that way. One of the other legal structures you might want to consider is a limited company. Now, to be frank, with all of the tax changes that have happened over the last few years, it's not as attractive to have a limited company as it used to be. There used to be a number of tax benefits and incentives that you were able to use, such as dividend relief tax and a lower tax rate for dividends. Those have been largely reduced so that there's no longer a significant, in my opinion, tax advantage to trading as a limited company from a tax perspective. Obviously, I would advise, any of the things discussed in this podcast, you get your own independent advice. I'm not a financial advisor, and certainly could not advise people in a legal capacity or a financial capacity. I'm not regulated to do so. I'm just drawing on my own experience over the last 30 odd years. So moving on to limited companies, like I said, there are pros and cons like anything, but one of the advantages of having a limited company is, going by the name, it limits your personal liability. So the limited company is created as a separate legal entity, essentially like another person or another legal capacity, and your personal liability as a director of that company is limited, providing you don't give away things such as personal guarantees, which is, say you took a loan from the bank, for example, and you had no assets within the company to secure it against. They might ask you to put your home up as collateral, in which case you would sign a personal guarantee. That obviously then removes the limited liability element for that particular loan or financing that you were to put into place. So aside from that, if you haven't got any of those things in place, then provided you comply with the law, obviously, the limited company bears the majority of the liability for any debts. And so if you were to get into financial difficulty, then that's the point where your personal assets would be protected because they are outside of the limited company. If you're thinking about raising things such as funds, getting loans or investors, for example, it can also be easier to do that in a limited company because you can issue shares, which obviously you can't do as a sole trader. So if that's something that you want to consider moving forward, then often the limited company offers greater scope for those kinds of things, and it's more attractive to potential investors to be able to do that. It can also be more attractive to be able to sell a limited company because you can sell that it's an asset rather than just being your own business as a sole trader. Another pro is that, as I mentioned earlier when I was talking about sole traders, one of the potential benefits, if you wanted to delay taking the income out of the business, is that whilst the business may well generate profits at a given point in time in a given financial year, you don't have to take those out immediately. There's not like sole trader where any profits are generated are considered your own income immediately. In a limited company, whilst you'd have to pay corporation tax, you don't have to take that as income immediately. So essentially, you would pay corporation tax at the prevailing rate in the financial year, but then you can actually leave any excess profits in the business. So unfortunately, like everything, there are, of course, downsides. Limited companies are slightly more complex entities, so they take a little bit of time and the support of an accountant or a tax advisor to set those up. You also have more complex than sole trader or partnership arrangements. Reporting requirements, so you have to produce accounts for Companies House, you have to be registered with Companies House. There are certain deadlines like confirmation statements you have to send in. So again, you would very likely need an accountant to help you with those, which obviously incurs additional cost and complexity through having a limited company. It's also worth being aware that unlike when it's a sole trader or partnership arrangement, there is a certain amount of visibility of your company's information online. You have minimum reporting requirements, which are basically a balance sheet, so people won't necessarily be able to see exactly how much you paid yourself in any given year. But there is a higher degree of transparency when it comes to having a limited company. Because it's a separate legal entity, that is a legal requirement. So again, get some advice on that and understand what those are, just so that you're fully aware of that requirement before considering setting up a limited company. The third legal structure I thought was probably worth mentioning, and I said there are many others, is a limited liability partnership, or an LLP. I'm sure you've probably seen these when it comes to things such as accountants or solicitors, where companies are likely to have multiple partners or shareholders. They're kind of a mid-ground between limited company and sole trader. So you have a greater degree of flexibility of ownership, and limited company tends to be slightly more rigid and difficult to change in terms of ownership and shares than an LLP. So if you're anticipating a company where you're going to have partners or associates or shareholders coming and going on a more regular basis, then this might be a structure worth thinking about. To be honest, it's not something I've ever done. I'm aware of it and I have a certain degree of understanding, but it's something that you would certainly need to get some advice on to make sure that you can understand the pros and cons of doing that. The other flip side of that is the profits from the company are taxed as your personal income, as much like being a sole trader or a partnership. So, like I said, it's kind of a middle ground between the two. The reporting is not as stringent as a limited company, but it is still greater than a sole partnership. It's certainly worth considering if you're thinking about needing more flexible ownership or share distribution. So I hope that gives you a bit of a snapshot as to some of the legal structures you might want to consider when thinking about moving into private practice. One other big question that we often get asked is around VAT. Everybody's favourite subject, I'm sure, but it is a really important tax to be aware of and to understand your obligations and also your options when it comes to working in private practice. So the first thing to say when it regard to VAT is that many of the services that medical or mental health practitioners will provide are exempt from VAT. Not all, really important to stress that. Medical care services are largely exempt from VAT. So what the phrase medical care means is any service relating to the protection, maintenance, or restoration of the mental health of the person concerned when it comes to mental health practitioners, obviously specifically. So that would cover a broad spectrum of work. One area that it does not cover is expert witness services, because they are not deemed to be predominantly or primarily for the protection, maintenance, or restoration of mental health. So expert witness services are not exempt from VAT, really important consideration. Many of the other services such as therapy, educational healthcare plan assessments, for which many of our ed psychs do, are very likely and almost certainly to be exempt from VAT. Now, it doesn't mean you can't register for VAT still, because you can, but it means that if you provide those services, and again, make sure you double check these things, because obviously legislation does change from time to time, and we're about to go into a new budget, so up-to-date advice is really important, but it means that you don't have to register for VAT if you provide those services. And that leads me into the next question, which is, do I have to register for VAT at all? Well, the short answer is if your turnover in any 12-month period, so your turnover, by turnover I mean sales, essentially, your trading, are below £90,000, I think the current limit is, then you do not have to register for VAT at all. Even if your services are not exempt from VAT, you still don't have to register for VAT unless your sales in any given 12-month period are over £90,000. So you could provide expert witness services within the mental health field, which are not exempt from VAT. But if your sales for those services, and it's specific to those services, because you might do, say, expert witness services part of your trading, but the other part might be therapy, for example, it's only the VATable services that need to be calculated in terms of, do I have to register for VAT? So a further consideration when thinking about VAT and whether you'd have to register for that. Standard VAT, and like I said, there are a few different types of VAT taxation, and I'll cover the standard element in a moment. So standard VAT, you generally do your VAT returns quarterly, where you will state the VAT that you have charged. You can also reclaim the VAT on certain purchases that you make that are related to business expense. So if you have suppliers that provide things into your business that have VAT added to them, then you can essentially deduct that from the amount to get some advice. I'm just trying to cover the broad principles of VAT here. Just to talk very briefly about two other different types of VAT, I appreciate it's not the most scintillating subject, but it's nonetheless very important. And I won't go into huge detail, but there are two other methods that are probably worth being aware of. One of them is flat rate, which is where you basically just pay a flat rate of VAT on your services, which makes the return simpler. You don't have to keep as accurate a record because you're not able to reclaim any VAT on purchases, but you basically have to charge a flat rate on any services that you provide, and you just pay that to the taxman at the end of any given quarter. But it does mean that you can't reclaim the VAT on purchases that you've made. The final one is cash accounting, which is relevant, I guess, particularly for you're likely to have delayed payments. So expert witness services, for example, are notorious for being late payers because it's quite a complicated funding mechanism. And that basically means that you would only pay the VAT on the service you've provided at the point you receive payment from your client. So let's say in a given year, you do £20,000 worth of expert witness work on which you had to charge VAT. So you would have to charge an additional £4,000. That would also mean that per quarter, you'd have to be paying that VAT along with those invoices. Now, in expert witness work, it can sometimes take quite a long time to get paid. So potentially, then what that would mean is that you would have to pay that £4,000 VAT before you've even received payment from your clients. Because solicitors can sometimes take quite a while to pay for a variety of reasons. The cash accounting advantage is rather than have to pay that VAT at the point that you bill it to the client, it means you would only pay it at the point that you receive payment from the client. So from a cash flow point of view, it has worth considering because it means you're not having to pay the VAT potentially before you've even received the payment from the client. Again, get some advice worth thinking about. Just wanted to make you aware that is something that exists. Okay, I think that's more than enough talk about tax. Not the most exciting of subjects, but nonetheless a very important one. Let's move on to some of the other commercial considerations about running your own private practice, one of which is pensions, which is a very important subject, particularly if you're getting somewhere near that age, but equally important, as I keep telling my kids, to think about that when you're younger, because obviously the sooner you start paying into it, the better off you will be when you come to that point. One of the major distinctions between self-employed or employee pension contributions versus employer pension contributions is national insurance. If you receive your income and then you pay that as an employee and then you pay that into a pension, your employer and you will have paid national insurance contributions as well as tax. Now, when you, as an employee or a self-employed person, if you were then to pay a proportion of that into your pension, you can reclaim the tax back. So let's say you paid 25% as an employee of your income, you received 75% essentially of that money. When you then pay that into a pension, you can claim back the tax that you'd paid originally. What you can't claim back is any national insurance. So if you pay the national insurance rate at the normal rate, then that is not reclaimable as part of a pension contribution. The major difference when doing it as a limited company, as an employer's contribution, is no national insurance is payable at that point on pension contributions. So you save that additional, I think it's 14% or whatever it is now, which is quite a large chunk. So it's tax-free essentially from that point of view. And like I said earlier in the podcast, you can also use that to deduct against your corporation tax liability. So that's still one of the major advantages of pension contributions via a limited company as opposed to as an employee or a self-employed person, is that national insurance tax saving. A few other things to think about, one of which is insurance. I'm sure you'll all be aware that you need to have, at the very least, professional indemnity insurance, irrespective of what capacity you trade in. That will just cover you as a professional for any claims that may be made against you. It will obviously only cover you providing you've acted within the law and within your regulators' stipulations. Professional indemnity insurance is a hugely important thing to consider. Many companies, if you're working with companies, will insist that you have that in place yourself. If you also move on to employing people, then you'll need to think about other things such as employers' liability cover. And also other things we're thinking about are public and products liability cover as well. Many companies, insurance companies, provide these as a bundle. Think about what you might need. You might not think that you need public liability cover, but if you operate from a clinic, for example, and patients come into that clinic and one of them were to suffer an injury as a result of attending your clinic, that could be something you could be claimed against, just as an example. So again, worth getting some advice and just having a think about the types and levels of cover that you need. They tend to be fairly affordable these days, and there are obviously a number of providers out there you can speak to just to get advice on that. One of the pluses of that is also you can claim that back as a tax relief element. So any insurance premiums you pay towards your private practice can be claimed back from a tax point of view, either as a self-employed person, or you can put them through the limited company and you can claim that to reduce your tax bill, provided they are limited or purely applicable to the private practice within which you're trading. It's also worth thinking, when I talk about types of cover, think about the way in which you work. So if you work purely remotely, then that's one thing. But if you're going into work settings or schools, for example, you might need different levels of cover, or people's homes. So just think about the types of activities and trading that you're likely to undertake, and then consequently the type of insurance that you're likely to need. Also, if you did move to the point where you were to have employees or associates, you need to think about the type of cover that they would need to have in place, or if they're employees, you would need to have in place for them to ensure that not just you are covered, but also any employees or associates that you work with or employ have either their own cover, predominantly when it comes to associates, but if in terms of employees, you would need to make sure that you had cover for you or for the business to ensure that that covered their activities as well. Another consideration is bank accounts. When you are a self-employed person, you don't have to have a separate bank account. I would suggest it's advisable to have that so you can isolate that income and just have a clearer view as to what the income and outgoings are for that entity, for your self-employed transactions and business. Always advisable to do that, in my opinion. Like I said, it's not necessary, but it just keeps things cleaner. If you were to move to a limited company, then the limited company itself would have to have its own bank account because it's classified as a separate legal entity. So you would have to have a limited company bank account for which to receive or spend funds. If you're thinking about loans, you might need a loan to get the business going or to expand. The major difference between limited company and self-employed is that for a self-employed person, if they took out a loan, then they would be personally liable for that loan. If you do it through a limited company, provided you didn't give a personal guarantee, then that loan would be attached to the limited company rather than to you individually. In reality, many private practices in the mental health world will not have huge assets like buildings, etc. Some do, of course, if they purchase premises, but many don't. So if the limited company didn't have huge assets against which the company could secure its loan, then it's very likely that you would nonetheless need to give a personal guarantee against your own property, for example. So that essentially nullifies the limited liability that the limited company would give you. So just something to be aware of. And one final thing in this section to think about is accounting software and making tax digital. Like I said, the government has brought in deadlines and thresholds by which people have to be registered and provide their tax returns or whatever it is through the Making Tax Digital portal with the HMRC. You can find those online. Roughly speaking, I think the first one starts around 6th of April next year, 2026. Anybody earning over £50,000 has to work through the Making Tax Digital system. I think then for the following 2 years, that threshold will drop to £30,000 and then £20,000 respectively. So they're basically reducing the threshold at which people have to register Making Tax Digital over the next 2 or 3 years so that more and more people will come under that bracket. Now, there are a number of off-the-peg softwares that will connect directly to the HMRC portal and make that very simple, or you can use an accountant to do that for you. But it's just something to be aware of. Obviously, as increasingly services go online, that is something that HMRC are pushing quite hard, and you need to make sure you understand what your obligations are. Okay, so we've talked about a lot of the sort of legal, tax, regulatory elements that you need to think about. Maybe we're thinking about some of the more sort of sales and marketing element and some of the more operational considerations when you're starting out in private practice. The main one, or one of the main ones, being fees, of course. You need to work out what can or should you charge for the service you provide. And obviously that will vary wildly depending on the types of service that you're providing. And it's always worthwhile doing some research to see what the competition is charging in your area for the similar services. In some instances, there are cap rates, thinking specifically about legal aid, for example. If you're doing expert witness work that is publicly funded via the legal aid system, there are specific fixed rates that the legal aid agency will pay. They can be found very easily online for all the different types of services, psychiatric, psychological, etc. It'd be worth making sure you know what is a competitive rate, or are there any fixed rates that you need to be aligning yourself with as part of that fee structure. When thinking about your fees, one thing that's really important to consider is any additional costs that you might have. If I'm working remotely, then I charge whatever it might be, £100 an hour, for example, just to use a very round figure. But there are additional costs that you'll want to factor in, some of which are across the business. So it might be insurance, for example, or accountancy fees. Other obviously very specific to each individual session or assessment, whatever it might be, such as room costs or travel. So I would suggest doing a bit of a breakdown as to the different types of service you might want to provide, the costs associated with those, so that you can look at, okay, if I'm charging £100 an hour, then what are the direct costs associated with those, such as rooms or travel, etc. So what is your actual income going to be after you've taken those off? And then, of course, the other considerations are the overheads, such as insurance or professional registrations that tend to be annual fees, but nonetheless, costs associated with having a private practice and running that business. Of course, when we talk about fees, one other thing to consider is how are you going to take payment? I think cash these days is fairly unusual, but is certainly one option. If you're thinking about other methods such as bank transfer or credit cards, then sometimes there are fees attached to those, particularly with credit cards. So you would need to register with some sort of merchant to enable you to take credit card payments. Very easy to do these days with things such as Google Pay, etc. But they do tend to have percentage fees attached to them, so something else to be aware of. Clearly, it's a lot easier for if you're providing therapy, for example, for self-funded individuals, then a credit card is often a method they might want to use, but just worth doing your research to find out, what you have to do to set that up and what the associated fees in providing that payment method. I mentioned clinic space earlier. It's a really important consideration if you're going to offer face-to-face patient services. So are you going to offer a specific clinic location? Is it just going to be one or more than one? Are you going to commit to a monthly or an annual contract with a particular location? Or, I know some people use more of these Regis or WeWork type spaces where they can just rent locations or rooms by the hour. Always worth doing research again and just having a think about where do you want to be located? What kind of commitment do you want to give in terms of, do you want to rent them by the hour, or do you want to commit to a certain number of days per week or per month or whatever it might be, and just seeing what's available in your area, because they can vary quite wildly in terms of cost and flexibility as well. As part of that thinking, you want to think about a correspondence address potentially, so that patients can get hold of you, or suppliers can send invoices or whatever it might be. I know some clinics will manage that for you and essentially provide a sort of a postal box service. You can, of course, use your home address, or you might want to consider just a post office PO box. If you're setting up a limited company, you cannot register a limited company to a PO box. You would need to have some kind of fixed address. Very often accountants, for example, if you have an accountant, will provide those services. If they do their accounts for your limited company, they will probably for a fee allow you to register your company to their address. But if you're not using a limited company capacity, then it might be worth thinking about, do you need a correspondence address? You might not want to give out your home address, for example, so you may need to think about other means of patients or suppliers or whoever getting in contact with you. Another really important thing to think about is policies and procedures. Now, as a small business, you don't need to have dozens of these things, but I would suggest as an absolute minimum, you would have terms and conditions, which include payment terms, cancellations, all those types of things, and ensure that patients are aware of those well in advance, so that, if you have any issues, you can refer them back to those. Because the last thing you want to do is have a protracted argument about liability or cancellations or fees, that kind of thing. So, like I said, T's and C's are really important as an absolute minimum. You can often host those on your website and refer them, clients to those, or just have I've read the T's and C's link in any sort of sign-up document that they might have. Okay, so that was some of the more practical elements. Moving on to some of the more sales and marketing-y stuff. Obviously, one huge consideration when moving into private practice is how are you going to get your referrals? Now, there's any number of ways you can do this, and I'm sure you'll have already thought about this before you even consider doing so. But just to cover a few of the broad areas, Obviously, websites are essentially a shop window, and you don't need to have something particularly but certainly something where people can check your credentials, the types of service you provide, potentially your fees, terms and conditions, as I said. And these days they can be done, very economically, and actually a lot of people do them themselves with many of the web providers that are out there that have these kind of drag and drop website builders, which can be pretty simple to use if you're minded to do so. But I would suggest that a website, even if you have a very small entity, is always worth considering. You can also then use that if you wanted to promote your business through advertising or things such as Google Ads, etc., that you can link to your website and potentially drive your business and grow your business online through online advertising. A whole host of other methods, of course. I'm sure you'll have your existing networks that you can get referrals from, either colleagues or previous employers that you can work with. Always worth thinking about networking within your own sector. So if you're an educational psychologist, linking up with local schools, or if you're working outside of that capacity, potentially with therapy, GPs, those kinds of things, always useful to see if you can connect with local health practitioners, see if you're working in the expert witness field, the local firms of solicitors, and those kinds of things, and just building that network so that they're aware of you and they can refer to you or even use you themselves if they wish to do so. I'm sure there's all kinds of other local groups that you might want to consider, or networking events as well. I know lots of chambers of commerce or the Federation of Small Businesses tend to run events in specific areas where you can either network to build your business or also connect with other professionals in the area that might be helpful to have access to, such as accountants or solicitors, for example. Social media is obviously a huge thing these days. I have to confess I'm not a social media guru by any stretch of the imagination, but always a consideration at the very least as to whether that's something that you should be targeting from a marketing perspective. Again, very dependent on the types of service you're providing as to which or if any of the social media platforms you might want to use. Obviously, from a business to business point of view, LinkedIn tends to be one of the major ones. Facebook, Twitter, Instagram obviously may lend themselves to other types of private practice. Particularly if you're looking to work with parents directly, then Facebook, I think, is still very strong, and it might be worth joining local groups or special interest groups to do some networking and potentially promote your services there. As I mentioned earlier, Google Ads is also worth thinking about, and many of the social media platforms also have sponsored advertising. Also, I know Facebook and Twitter and LinkedIn, you can take out paid ads essentially within very specific areas or geographic locations or professional areas. So worth doing research into that and having a think about, is that something that you want to do to try and grow and increase your business? They can be expensive and you can spend a lot of money very quickly if you're not careful. So probably worth getting some advice as to how best to manage that so that you make sure that you get a decent return on your investment and you make sure you target that advertising effectively to the geographical area or professional specialism that you want to. And finally, on a sort of marketing perspective, it's also worth thinking about potentially directories or commercial sites that offer services to the general public, and you can pay to be part of those. Counselling directory, for example, not wishing to name any specifics, but it's just an example of where they advertise therapists across the country, and then clients can go on and look for individual therapists in their area by specialism, etc. And obviously a whole range of other directories, including those run by the professional bodies. I know the BPS has quite a good directory that psychologists can advertise in, and obviously has that additional credibility because it is the BPS. So again, worth thinking about directories or professional bodies, whether they have directories that you can advertise in to give clients access to your website or your contact details. And finally, on this point around how to get referrals, you can obviously work with the major private health providers if you provide the services that they require, such as Bupa or AXA, for example. And obviously, they have specific terms and conditions and fees and all that kind of thing that you have to sign up to. So again, worth doing your research on that. If you provide, say, therapy, for example, then it's certainly something to consider. And finally, there are, of course, not to wish to promote ourselves, but agencies, of which we are one, where you can just sign up to them and they can provide work to you within your field of specialism, across a number of sectors. So it could be in therapy, or it could be in expert witness work or education, or any number of areas. There are a number of different agencies out there that you could sign up to that can then target referrals for you. Okay, so moving on from the sort of sales and marketing element, thinking about some bodies that you may wish or be required to register with. Obviously, they're the professional regulators with whom, depending on a profession, you have to be registered. Obviously, for psychologists, it's the HCPC. For psychiatrists, it's the GMC. I'm sure you're all aware of those already. Obviously, those apply for the relevant protected titles when it comes to psychology. And the HCPC has a very good directory where you can see all of those already. And there's a few others that you might want to consider, some of which are obligatory, one of which is the Information Commissioner's Office, the ICO, where if you're handling any kind of personal data, which you certainly would if you're operating as a private practitioner in the mental health world, you must be registered with the ICO, either as a private individual if you're working as a self-employed practitioner, or the company would need to be registered if you're going through a limited company or an LLP. So the ICO is really important to be aware that you're registered with them. And there's a very small fee depending on the size of the organization that you'd have to pay. And then I think you have to renew that annually. Obviously, things such as DBS checks. Many patients will obviously want to see those. You should have those in place if you're working in this field. And also many companies or agencies will want to have evidence of your DBS registration before they'll be able to work with you or agree to work with you. One thing that few people are aware of is the DBS update service, which is basically an annual subscription that you can sign up to when you first get your DBS check. And I think you have to do it within 30 days of receiving your initial DBS certificate when you go through the check at any given point. You can then sign up to the DBS update service, which basically means that from then on, you can simply provide your certificate number, I think it's your date of birth, and then any employer or agency that you wanted to work with can then go on and access that database live and print off a summary. So you basically don't have to go back through the whole DBS check process, provided they accept that method. Not every agency or company will accept the DBS update service, but the vast majority do. And it just means you don't have to keep going back through the full DBS disclosure check process, which can be quite arduous. So the DBS update service is certainly something worth thinking about. And finally, a few other organizations you might want to think about depending on your profession. There are obviously additional non-regulatory professional organizations that are worth thinking about. So for psychologists, the BACP, the BABCP, or ACHIP, which are a number of different organizations that represent psychologists from a marketing but also a professional capacity. Like I said, non-regulatory, but certainly worth considering. There are a number of expert witness organizations out there that provide advice, support, and also marketing opportunities. So again, if you're working in the expert witness field, that might be worth thinking about. And the final one, which I'm a big fan of, which is non-specific to any profession, is the Federation of Small Businesses. I've been a member of this organization for over 20 years now, I think. And they are pretty much do what they say on the tin. They represent small businesses in a number of different capacities, but they also offer a huge range of support from HR, legal, tax support and guidance if you ever need that. So really worth having a look at their website. It's a very low fee to join them, and actually the benefits that they offer as a result of that can be quite interesting. Well, I think that's everything from me. I hope that has been helpful. I appreciate it's an awful lot of information in there. Not all of it's that exciting, but it is nonetheless really important to, at the very least, be aware of. But obviously, there are many legal requirements when you're thinking about moving into private practice. So I hope you find that helpful, and we may well follow up with further podcasts along these lines in the future. Thanks very much for listening.